Caterpillar stock has been soaring in 2024. Of course, I'm happy with that result because I placed Caterpillar as one of my top recommended dividend stocks to buy in 2024. It's been one of my top 10 dividend stocks to buy all year long. It's now trading at $380 per share after starting the year around $300 per share. But is the stock still a buy? Is it still one of my top dividend stocks to buy after soaring to these valuations? That's what I'm going to answer in this video. I'm going to revisit Caterpillar stock for passive income investors and answer if it's still one of my favorite dividend stocks to buy right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So you can see from the price chart that Caterpillar's had an excellent year. It's up to $380 per share after starting the year much lower. It's had volatile times, but in the recent month or so, the stock price has soared, and I thought it would be an opportune time to revisit this excellent company. Now, Caterpillar stock is only offering a dividend yield of 1.4% now. The dividend yield falls, remember, when the market price increases. Caterpillar, a year or two ago, had dividend yields closer to 2%, and in fact closer to 3% around July of 2022. That dividend yield now is very small. I often say the dividend yield is not the only reason to buy or sell a stock, and you'll notice that I had recommended Caterpillar as a best dividend stock to buy, even though the dividend yield was not that great to begin with in 2024, but because the price has increased so much, dividend stock investors have made a great return on Caterpillar stock. So the dividend yield is one component of the total return that investors should consider with dividend stocks. Now, looking at the company's revenue longer term, you'll notice the natural cyclicality of the business, but you'll also notice excellent growth for Caterpillar in recent years, especially coming after the pandemic, where governments worldwide increased substantially fiscal stimulus and spending on projects that creates more construction. And that's great news for Caterpillar, seeing its revenue jump to $66 billion, up from around $55 billion in 2015, with much of that growth coming since 2021, when the bulk of the fiscal stimulus worldwide started to get passed. Now, that revenue growth has led to excellent profit margins for Caterpillar. It's now generating the highest profit margins in its history at close to 21% operating profit margin. That's way above where it was in 2015, where it was closer to 10%. For a heavy machinery company like Caterpillar to generate operating profit margins of 20% is truly impressive. This isn't a software company where it's easier to generate higher profit margins because you have an asset-light business model. Caterpillar's business model is very capital intensive. It makes and sells heavy machinery, so it's difficult to generate very high profit margins when you have this kind of a business model. And so Caterpillar's 20% is really impressive. Now, looking ahead, the analysts on Wall Street that are following Caterpillar stock, they expect this company will grow its earnings per share at roughly 5% per year over the next 5 years. Of course, nobody knows what's going to happen in the future. These are just the best estimates of analysts that are following Caterpillar stock. Interestingly enough, in the previous 5 years, Caterpillar's earnings per share soared by 29% per year. Now, that's not only because of the fiscal stimulus, but Caterpillar, given its market power, has been able to exercise pricing power, increasing average selling prices, and thereby increasing profitability. Also, Caterpillar benefited from the inflationary boom, which created increasing demand for construction and increasing demand for products because the prices industry-wide, regardless of which industry you looked at, were elevated. And so business investment increased as a result of higher prices. If you had a piece of land that you weren't developing because you were concerned about what price you were going to receive for your eventual completed project, that became more favorable as inflation soared, right? Home prices in particular in the United States are up 50% from 2019. Rent prices are up 50% from 2019. So if you had a piece of land you were waiting to develop, this was the opportune time to develop that land, turn it into a business, turn it into a real estate property turn it into a rental property, turn it into a manufacturing, whatever it might be. It was an opportune time and it all worked excellently for Caterpillar. Of course, those were the factors I was counting on, and those were the reasons why I had recommended Caterpillar stock as one of my top dividend stocks to buy. I can see the incoming investment boom, and I can see that being favorable for Caterpillar and Caterpillar stock investors. Following that boom, Caterpillar is now trading at a forward price to earnings of nearly 17. This is the most expensive this stock has been going back 3 years. So the increase in stock price has lifted the valuation up closer to 17. And we just noticed the earnings per share expectations over the next 5 years are just 5%. So while the growth expectations for the previous 5 years were excellent, I don't think the growth expectations for the next 5 years are going to be as excellent. There's been a lot of overinvestment, and there's been a lot of investment because of those higher prices. And now consumers are starting to pull back. Economic growth worldwide is starting to slow down. And so you're going to see a decrease in economic activity. Growth is not going to be as robust as it was in the previous couple of years, which was stimulated by governments worldwide and consumers that had excellent balance sheets. Savings were high, debt was low, and we're seeing the opposite of that now, where savings are moving lower, consumer debt is at the highest level it's been in a very long time. And so businesses, before starting construction, are going to think twice before they start new projects, entering into this kind of consumer environment where job growth is slowing, their budgets are getting tighter, and so businesses are going to grow more cautious as a result of those macroeconomic factors. Now, I highlighted that I had Caterpillar as a top 10 dividend stock, and I've had it here all year long. I last updated this recommendation on July 1st. But given where I see this company today and given where I see its prospects compared with its valuation, I'm removing Caterpillar stock from my top dividend stock list. I no longer think it's one of my top 10 dividend stocks to buy, but I still think the stock is a buy overall. I just don't think it's one of my favorite dividend stocks to buy. There are other dividend stocks that I like much more than Caterpillar now, following the big stock price boom, the increase in the valuation, and the expectations for the next 5 years. So Caterpillar, hopefully you followed this recommendation and you made a nice return on investment. And this doesn't mean you should sell Caterpillar stock. This just means that, I bring it down a notch. It's no longer one of my top 10 favorites. It's still a stock that I think offers dividend stock investors a good value. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.